All right, this thing on. Good morning, everybody. Happy Monday. Hope you all had a great weekend. Welcome to the morning show. This is Stock Market TV. I am Spencer. We've got JC. No Steve today. He'll be back tomorrow. But we got Alfonso whipping up charts for us as we speak. So that's always appreciated. Thank you, Fonz, for all your hard work behind the scenes. Good morning, chat. Good morning, Rachel. Good morning, Chris, Sam, Yosul. I said Rachel already. What's up, everyone? Hope you all had a great weekend. TrendSpotter's here. What's up, man? How we doing? All right, we got a lot to talk about today. International stocks versus domestic stocks. We're going to talk about the breakdown of that performance recently. I'm sure you all saw the video over the weekend of the incident with the Alaska Airlines plane. We'll talk about that. There are some implications for that this morning as far as the market is concerned. And let's see what the show takes us. Jason Leavitt is the guest. He'll be on at 9, so you know what to do. Hit that like button for me, please. Let's go.
All right. Good morning. How are you, Spencer?
How was your weekend? Tough game last night. Oh, no. You guys lost. That's right.
Yeah, we lost. I mean, listen, you got to be good teams if you're going to win the Super Bowl. So whether we played Buffalo in the playoffs or Baltimore in the playoffs or KC or all of them,
yeah,
you got to beat them. So let's get going next week. Although serious dad moment over the weekend, organize the garage.
That's fun.
I definitely don't find it fun. But I definitely derive an unusual amount of pleasure once it's complete. And I walk in there to get some water out of the fridge in the garage, and I'm like, hey, look how organized this garage is.
You don't like organizing? I love organizing things. I love putting things back where they belong. I might not be the cleanest person, but I am very organized.
I'd rather be taking a nap now that I get those with 3 kids, or building a snowman with my daughter, or I don't know, anything but organizing anything really, garage or otherwise.
So satisfying. Hey, how much snow did you get?
I don't know, maybe like 4 inches, 5 inches, maybe.
Oh,
we got more snow this weekend than we did all of last year combined.
Yes,
so
that is true.
My daughter last year was old enough to understand what snow was and what snowmen were, and we weren't able to, play around with it at all. So yesterday or 2 days ago, she was just like doing snow angels, building snowmen. It was cool.
Yeah, well, I think we got about 3 to 4 inches, but it's going to be gone by tomorrow. So
is it?
It's supposed to be like 50 degrees tomorrow.
Great. I'm okay with that. I could use a long run. I have led the league in cannolis over the last couple of weeks. Too many cannolis.
Good. Yeah.
Not good. It's not good.
All right. Anyway, snow is over.
All right, we're back.
We are back. But let's run through some charts. I know we're talking about international versus US today.
Yeah, I think we should.
So let's do that.
Do it. All right. So Spencer is real. Yes. So a couple of things. I'm seeing things on the old Twitterati about the worst start to a year ever. And that's just not true at all. It's actually not even top 20 worst starts to a year for the S&P 500. So it's not at all.
I was looking at, obviously I was seeing those stats too after the first couple of days, and I guess January of 2000 the NASDAQ fell like 7% in the first couple of days of the year. Can you imagine being there for that? That must have been wild. But alas, I mean,
every year wild things happen in some various assets, right? Like,
that's true.
You're cherry picking the beginning of the NASDAQ, and there's
you're right. I know. Yeah.
You know what I mean? Like, this is the market. Crude oil traded below zero. May I remind you?
That was a fun period too.
That was really fun. Really fun. Yeah. So anyway, today is the last day of the first 5 days of the year. I think S&Ps are down about 1.5% for the first 5 days. Now let's see how it closes up for the day. Santa Claus was a no-show. First 5 days has been down. Things are starting to add up that are not exactly the most bullish of signs. Now, of course, where does seasonality fall in like our top 10, most important data points and indicators for the overall market, probably not near the top. But nevertheless, we do pay more attention when the market ignores seasonal trends. Last year, the market didn't ignore seasonal trends at all. In fact, it was trading with seasonality all year long. So there was not really anything to discuss. Now we're starting to see some things that don't normally happen. So that's an interesting heads up. One thing that happens quite often, Mr. Spencer Israel, is
Yep.
that in bull markets, if you study bull markets throughout history, you know what you're going to find? You're going to find that the United States underperforms in a lot of those.
Certainly not for the entire duration.
For a lot, yeah, for sure, the entire duration. For a lot of them, the United States underperforms. Now, humans
Hmm.
are very weak-minded when it comes to overcoming recency bias. It's all about, well, in the last cycle, yeah. Well, if technology is the dominant sector, as it was in the last cycle, then the United States is going to be a major outperformer. But in a lot of cases throughout history, the United States is an underperformer, and there are plenty of other countries around the world that are outperforming. And by the way, this cycle is just like that. The United States underperforming again. Which, just to be clear, is perfectly normal throughout bull markets throughout history. The United States underperforms in a lot of them. Let's check out Latin America in particular. This is one area of the world, one region that we definitely have been paying more attention to, as a lot of these countries have zero technology exposure, a lot more natural resources, industrials. That's really an area of focus coming into the year, and certainly last year. Here's Latin America putting up a 31% return since the beginning of last year. Mexico dominating that, up almost 40%. Brazil over 30%. Absolutely crushing whatever the United States is doing.
Well,
So,
I mean, if the Qs were on this chart, it'd be a different story.
yeah, but the Qs is more of a sector than an index.
Uh,
The Qs
ooh,
has zero financials,
yeah,
zero energy, zero materials, zero
yeah.
real estate,
It is
zero
probably
industrials. How is that a
it is
representation of
it's
this?
probably whether it's a representation or not it is still probably the second or third largest or most well followed American
Yeah, but
stock market
it's
index.
not a stock. It's not a representation of the stock market. It's more of a sector. It's more of a factor.
It's okay. I mean, but it's still
50% technology.
yeah, sure. But
And
again,
by the way, that 50% technology doesn't even include Google or Amazon or Tesla.
it is like, but again, it is still probably the second or third most well followed U.S. stock market index. So,
Yeah, so what?
I'm just commenting that as an index that is on the Mount Rushmore of U.S. stock market indexes, throw that on this chart, and you would see that the U.S. isn't doing so bad.
All
So,
right. Is the Russell 2000 on that Mount Rushmore?
well, there's 4 slots on Mount Rushmore, so probably right.
Got it.
Yeah,
Got it.
that would be the fourth slot, I would think.
So the point is, the S&P 500 is a better representation, or we could use the Dow Jones Industrial Average, but that's an even worse return. So I mean, regardless, I'm arguing here that when you're looking at the indexes themselves that include all the sectors, as opposed to the Nasdaq where it cherry picks just a few sectors, when it includes all the sectors, the United States, massive underperformer, is really all my point. And by the way, let's say the United States was actually outperforming Mexico and the S&P was up 40%. That doesn't change the fact that Latin America and Brazil and Mexico are ripping, right? You feel me? Like if we're splitting hairs about the US here, we're not even talking about the US. We're talking about the relentless strength in Latin America,
Okay.
countries
Yeah.
of the world, right?
Yeah. So I guess your point is as a true representation of each market, or as true as we can get,
Yeah.
then there we go. So Latin
Listen, throw the
America.
Qs if it makes you happy. Throw the Russell 2000 in there if it makes you happy. You have access to our Coifin account. Knock yourself out. My point is that the US is underperforming, broadly speaking, as it does quite often in bull markets. So it's not anything unusual that the US can't keep up with other countries. Now let's dive in a little bit. We went over a lot of this stuff on last week's conference call. If you want to drop the link for people who are not subscribers to All Star Charts,
Of course.
check that out, because last week's conference call was the first of the year. Very important. Um, let's take a look at the International Hall of Famers. So it's like, all right, JC, what do we do about it? Right? I've never been to Brazil. right? I don't even know where Peru is, right? You get those people. Last week we were on the podcast, myself and Joe Fahmy. We were guests with Josh Brown and Michael Batnick on the Compound and Friends. And one of the things that I did during the podcast was rip through a ton of these countries around the world that are making new highs. And there were a lot of them. It was very obnoxious, which was my point. The constant new highs, new 52-week highs, new all-time highs, huge bases resolving higher all over the world, right? And Josh and Batnick made it a good point, and Fahmy, that you're never going to see that on mainstream TV. What I did going through all of these charts all over the world, they said it on the podcast, you're never going to see that on mainstream TV because it's not in their best interest to give you all that good news, right? Nobody's watching the Weather Channel when it's sunny out and there isn't a cloud in the sky. Why would you watch the Weather Channel? Right? But if there's a hurricane, storm, snowstorm coming, that's when you put on the Weather Channel. So the basic cable television they're not incentivized to tell you the truth. Their only motivation is to get you to consume their content. That's it. In many cases, it's malicious, not always, but in many cases it is. And then here on the morning show, we like to tell it like it is, right, Spencer? We don't have any other motivations, right? No ulterior motives here. Do you have ulterior motives?
I just want to provide the best content and not sound like an idiot. That's all. That's my only goal here.
Well, you should try harder on that last one there. Just kidding. Love you. All right, let's talk about the Hall of Famers. So these are the International Hall of Famers. So one of the things that we did years ago was we created a list called the Hall of Famers because we were looking at the Dow Jones Industrial Average, and then those are 30 important stocks, and then we start adding the bellwethers for different sectors that might not be in the Dow, and it got to the point where it's like, okay, why don't we just focus on the 150 largest companies in America, and we call those the Hall of Famers. And if these are the biggest names, so if you get those right, you're going to get the market right. You're also going to get great trade ideas, and if you're an options trader, all of these are the biggest companies, so they all got liquid options market, so it's an options trader's dream. So that list, as good of an idea as I thought it was at the time, and we all thought, our whole team thought it was a good idea to do that, in my opinion, it has exceeded expectations over the years as we follow these Hall of Famers. Now, later on, we took this to a whole nother level, and we said, well, this is great. We got the biggest companies in the United States. It adds a ton of value, to some of the parts analysis. We get great trade ideas, liquid options market. This is fantastic. But what about the international names? So we did the same thing, but with the top 100 stocks outside of the United States that trade on U.S. exchanges. So none of these stocks are American companies. You got a lot from the UK, Switzerland, even the Czech Republic, India, of course, Belgium, Israel, Canada. A lot of Canada representation. Shout out Canada.
Interesting.
These are the International Hall of Famers. So these are the biggest companies in the world that trade on U.S. exchanges, but are not based in the United States. And in an environment where the United States is an underperformer, maybe we should be looking at some of these country stocks. And then also, even if the U.S. is outperforming, even if we're in a bear market, you're still going to find long opportunities in this list, right? And what you're going to notice here is that you're not getting a lot of technology. Certainly is not as much as you're going to get in the United States. Some of these countries, I should say, a lot of these countries have a 0% weighting in technology, right?
Yeah, now that you mention it, I see two technology companies.
Yeah, because the tech stocks are here. And then you got Taiwan and, China maybe. And then there's like some other tech stocks sprinkled around. But when you go to Latin America, you ain't going to find any tech. When you go to Europe, you're not going to find a lot of tech. The United Kingdom, for example, has 0% weighting to technology.
Yeah.
Right. All right. So I don't want to give away too much. Go to the conference call from last week and check all that out. Spencer dropped the link.
Yep. Link has been dropped.
But I will discuss a ticker symbol that we've mentioned a few times here. It's going to give you energy exposure to Brazil. Throw that one up there. This is Petrobras, PBR, making new 9-year highs. And as we get some of this rotation into some of these energy names, which we have seen, particularly in coal, when you overlay these coal stocks with energy in general, they tend to move together. I wanted to show. Let me just show it real quick. Is it irresponsible to derive a direction for energy stocks? Throw up new slide 5. This is a $4 or $5 billion, $4 billion coal stock and energy. These are $100+ billion companies that are driving this. So is it irresponsible to look at this coal stock and say, aha, the one on the bottom is going to follow the one on the top, right? I don't necessarily have an answer, but it is curious that these two have been moving tick for tick for years. And more recently, Alpha Metallurgical broke out to new all-time highs, while the energy sector index still has not. What do you think, Spencer? Is it irresponsible to overthink this, or do you think there's something here?
I haven't done the work, so I'm asking as someone who hasn't done the work. But how many other charts look like AMR right now? I mean,
A lot of them.
right. That's my point, right?
Yeah.
So there's really nothing special other than just the pure percentage gain of this thing. There's really nothing unique about this, right?
Throw up new slide 6 here. So just here, look at another one.
Right. Exactly. They all kind of look like that. So
right, if you want to look at new slide 7 here, just so you could see, what's been happening in the space, and if these coal stocks continue to act well, right? When is more traditional energy, oil and gas, going to take off? By the way, for you guys who have been around more than a cycle or two and remember the 2000s bull market, this used to be Walter Industries. Walter Industries, now Warrior Met Coal. I like this name better than Walter. If it was like Donnie Industries or the Dude Industries, that would be one thing. But hey now, Warrior Met is just cooler than Walter Industries, right? Who the hell is Walter?
Is Met metallurgical? Is that what that means?
I have no idea. This is a Matt Warder question. When I have questions about coal, which does happen from time to time, I got my coal guy, right?
Yep.
Listen, if you don't have a coal guy, what are you even thinking?
Hey, speaking of coal, we'll be posting our latest What the Thick video today, and it's about coal. So we recorded it on Friday. It'll be good. It'll go up today. And Ian Cully agrees with a lot of what you're saying about coal right now. Charts look good. So
and then I just wanted to kind of finish up with the NASDAQ and S&P up against those former highs.
Yep.
Let's remember what's in the NASDAQ and S&P. You got a lot of technology, which has been underperforming more recently. Healthcare made new 52-week highs last week. Also, financials closed at new 52-week highs last week. So this is a little thing we like to call rotation. And the way I learned it, and certainly from my experience, sector rotation is the lifeblood of a bull market, and we continue to see that rotation. So just something to keep in mind. All right, so let's talk about the Dow futures here. Quick little rundown. Dow futures are down 140 points. S&P futures are flat this morning. NASDAQ futures up 20 points, about 12 basis points. Bond futures, 30 years, slightly down, pretty much flat. Gold down 1%. Silver down 1%. Copper flat. Oil down 3%. And the dollar down today with the VIX inching higher, approaching 14, and yields slightly higher, holding above 4%. Now, of course, in the old funny money, you got BTC up 1,000 points this morning as we get that relative bid in growth and technology in general, with the Qs outperforming this morning. Bitcoin up towards 45,000, with Bitcoin up 1,000 points on the day, which makes it about 2%. Now on the Ethereum up almost 2%, about 40 points to 2264. And in the old Solana up almost 5%, back up towards 94. And any other cryptocurrencies that you think we should include in this particular rundown or not?
That's a good question. That's a good question for the chat.
Like, at what point do you stop?
That's a question for the chat. Yeah. If not, now accepting nominees. Every morning we briefly mention the price of
Well, how about
Bitcoin.
the ones that are standing out? Like Algorand this morning's up 10%. That's a big move. Big outside days putting in.
Okay.
That's a big one.
Okay. That is a big one. The only thing that really interests me this morning from
Injective protocol up 12%, by the way, looking to complete that
okay.
sideways move.
The only thing that really interests me this morning from a global markets point of view is China. Stop me if you heard this before, making new lows again. Just continuing to make new lows. Seems like we say that every 3 or 4 days.
When you in the conference call, one of the things that I mentioned was when I went through all those countries. I did the same thing in the podcast the other day. Didn't go through all the countries like I did in the conference call, but I went through a lot of them. And in the conference call, one thing I did was to point out that China doesn't look like all those others. Neither does Thailand, for that matter. But China just does not look like any of those other ones. China continuing to underperform.
You know what I finally did last week?
What'd you do?
Long overdue. I finally went and added all these international indexes. Not as hard as you would go, but I added a half dozen international indexes to my screen here, so I can actually look at them, because I don't know, I just hadn't done it I was putting it off for no apparent reason. So I finally have, aside from China, I finally have a whole bunch of European and Asian and Latin American indexes now that I can look at.
And did you use the ETFs or the indexes?
No, I use the indexes because I'm mostly interested in what's happening at like 7 a.m., 8 a.m., right? So I can get a feel for what happened overnight.
Yeah, look at you, Spencer Israel. I see you,
the,
dog. I
the,
see
the,
you.
the ETFs will just show 0, and that does nothing for me.
It does nothing for you. But as am I considered a veteran in the market? Yeah, right. 20 years, 20 years. That's veteran status.
Yeah.
To be a New Yorker, you only have to live in the city for 10 years. So I got that one.
I didn't know that.
Oh yeah, 10 years in the city to be a New Yorker, right? So I'm a New Yorker for life, and I love that. I fucking love New York. I don't understand.
Hold on a second. There has to be a statute of limitations once you leave New York.
You're always a New Yorker. If you're a New Yorker for 10 years, you're always a New Yorker. It's in your blood. It's in your heart. It's in your soul.
No, it's not. The New York in your blood is just dirt, JC. You gotta really scrub it out.
Don't you live in New Jersey? You're no one to talk. All right. First of all,
right.
When I'm in New York, I'm eating good. I'm seeing friends. I'm doing business. Right. I got a little pep in my step.
Oh, I mean, look, I totally agree with you.
I got I make moves, man. I don't dance no more. I make money moves. Right?
I couldn't agree more.
Fellow New Yorker, Cardi B. Right?
Yeah, straight.
Remember when Cardi B was talking about recessions? The new 52-week lows list peaked like a week later.
Oh gosh, I do remember that.
Remember that?
Do you remember, speaking of random celebrities, do you remember, I don't know, 5 years ago, the actress Elizabeth Banks did an ad campaign for like the S&P Midcap 400? Does that ring a bell?
No.
Okay, that was fun. Anyway, let's move on here. 8:54. We'll have Jason Leavitt on in 5. Talk about what he's seeing out there. Do we want to talk about some news? We did have.
Please give me the news. Tell me what's going on. I'm a little lost.
Well, there's really only one thing going on.
Busy organizing garages and whatnot.
About it. So here, let's talk about it. All right. Like everyone else, I woke up on Saturday morning to a whole bunch of headlines and videos about this plane. You saw the plane, right, JC? You saw the video? This Alaskan Airlines plane that departed from Portland, Oregon, and the window blew out.
First I hear about this.
Oh my goodness. So it, of course, as is always seems to always be the case here, this involved a 737 Max from Boeing. That was the model of the plane. So, and because this happened on Friday night, right, we had all weekend to sort of get the news out while the market was closed. So here's the situation. You've got Boeing down this morning because, as I said, it's one of their planes that had this issue. I don't have the video, but I'm sure you all saw it. It was pretty scary. The plane was at I think 16,000 feet, and they were just cruising at that altitude. I think it was 6 minutes after after departure, and the window just blew out. But there was no one sitting in that window seat or that middle seat, thankfully. But obviously, like massive depressurization, emergency landing, a whole thing. So now, every 737 Max plane has been grounded from Alaska, and I believe also United Airlines. Now, here's the thing: the window itself, or I guess it's called the plug door. That's what blew out. That was manufactured and installed by a different company. That's Spirit Aerosystems. That's SPR. That's why SPR is down about 14% this morning. There we go. So SPR, manufacturer of said faulty equipment, but on a Boeing plane. Why does it always seem to be Boeing with the issue? It's always this specific model, no less. So anyway, you've got Boeing, you got SPR, you got Alaska, you got United. Many implications here for you basically never see this happen, at least in America. I can't say for certain what happens overseas, but in America, you never see equipment failure of this magnitude where the window blew out. I mean, it's crazy. So there's going to be a press conference tomorrow. I think, or a company-wide address tomorrow from Boeing, where they're going to kind of speak to what they're doing about this and what happened. But obviously, massive investigations across the board. And the video, I don't think even did it justice, because the video was taken from like a few rows back, and I don't know, terrifying stuff. So that's good. Anyway, that's what happens. That happened Friday night, and yes, obviously, absolutely terrifying stuff. And there you go. So Boeing, Spirit Aerosystems, Alaska. Thank God nobody was hurt. But absolutely scary. And
the only people that keep getting hurt are the shareholders of Boeing.
Why is it? It's always this plane. It's always, whenever there's an issue, it's always this model 737 Max. I think they just got those back into circulation.
How do you even know this? How do you know anything about airplanes?
They were just able to resume sales. Remember how sales of these planes were halted for like years because they had they kept crashing, right? There was the whole issue. There was the crash. Was it in Singapore or Malaysia? Somebody fact checked me on that. I watched it. There's a whole documentary about what happened. There was like faulty software on these planes that they didn't tell the pilots about, and these planes kept crashing. And so this model of plane was grounded for like, I don't know, a couple years. And I think they just got back into service recently. And here we go again with the Maxes. So I don't know, man. Pretty wild stuff.
So hold on. Do me a favor. Throw up slide 2 there, because Boeing's 20% of the aerospace and defense index, which is breaking out to new all-time highs. But what I want to point out here is that Boeing is 20% of the aerospace and defense index, and Boeing sucks. So the fact that aerospace and defense is breaking out of a 5-year base here, and Boeing is 20% of it, and Boeing sucks. Yeah. Just think about the strength that you're seeing in aerospace and defense in the names that are actually working so well that they're dragging this index higher, despite Boeing being a complete disaster. General Dynamics is one of them, but there's plenty. Just throw up General Dynamics. We've talked about Axon here, plenty. Go down that list. Look, TransDigm,
yeah.
Textron is another one. TXT, another one that we've talked about here. So check those out.
Oh, it's Ethiopia. Thank you, OG. If you look at the Boeing chart, if you look at the monthly, I mean, this thing was down 50% heading into the pandemic, right? Like, I think it got as high as 446. And the reason is it looks the way it does on the chart is because those are all headline-induced moves. Those big moves, those big drops, except for March 2020, which we all know what that was. The rest of these drops are all the result of crashes with the 737 Max. So it's been several years now this has been going on, and it hasn't really gotten better, it seems. So I don't know. Yeah.
Listen, Boeing's a terrible company. Their shareholders deserve what they have coming to them.
They operate in a duopoly. There's basically 2 commercial airline manufacturers in the world,
which is fine. But whose problem is that? Certainly not ours. I would point you to the Aerospace and Defense Index. Go back there, and I will reiterate once again. Go to the ITA, Spencer. I will reiterate once again that this particular index is 20% Boeing. 20% Boeing, which is a terrible company, and can't go up in value, can't make shareholders any money, especially over the long term. And despite all that, Aerospace and Defense is breaking out of a multi-year base to new all-time highs. So if that doesn't signal for you to go into the Aerospace and Defense Index and see what the hell is in there that's driving these things higher, right? That's how I look at it, right? Boeing's not my problem. That's other people's problem.
Fair point from the chat. This is why we have the chat. Always on their toes. Thank you for correcting me. It's the max. The max 9 and the max 8 are different, and the max 9 is the plane in question here. They're different models, but still.
But more importantly, the company still sucks.
Point still
and
stands.
The shareholders are being penalized accordingly, as they should.
Yeah. Okay. All right. That's basically the only headline of the morning of note as far as the market's concerned. As far as the movement goes, let's bring on our guest. We got Jason Leavitt here. Let's bring him on.
I like Jason.
Yep.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
All right. What's up, Jason? How are you?
Hey, JC. Good morning. Spencer.
Good morning.
It's going off on Boeing, you know.
I hear you.
I mean, these people's problems are not my problems.
I hear it's not often you got a company that has a near monopoly and they can't figure out how to make money.
Well said, Jason. Well said. It's true.
Yeah. I mean, yeah. You're absolutely. There's Boeing.
Yeah, they have a monopoly in a pretty shitty business.
There's
so
Boeing and there's Boeing and there's Airbus and there's nobody else. So I don't know.
Yep.
Anyway,
when's Tesla going to start making planes? That's got to be coming at some point, right? They're making rocket ships and they're making cars. There's a step in between there, no?
Maybe.
Not to get all fundamental on y'all, but you know. All right. No Jason, a great conversation we had last time you were on the show. The Fun Police took too long to get you back, but we're happy to have you. Happy New Year.
Thank you. Same to you.
Hope the bull market is treating you well. Why don't you talk to me a little bit about maybe where you think we stand on this whole market?
So it's kind of hard not to be bullish and optimistic right now. When you look at the big picture, Dow at a high, global Dow at a high. And of course,
first of all, I love that you look at the global Dow. I feel like you and me might be the only two people.
The global Dow is like 58% international, like outside the US, and that's at a new high. So you look at Europe and it's like,
by the way, but the global Dow is only 13% technology. It's got 20% financials, ton of industrials. So, I mean, to me, the composition of that index is very telling.
Yeah. And so you look at Europe and a lot of industry, a lot of countries out there hitting new highs, S&P near a new high. But if you consider dividends, it's at a high. Mid caps at a near a high with dividends. Only the small caps are lagging. So it's kind of hard to argue with that. When you look at the internals, it's not just 7 stocks carrying the market higher. There's really good broad-based strength, like number of stocks above 50-day moving average, number of stocks printing 20-day new highs, 50-day new highs. It's, strength is broad-based. Lots of things are participating. And then you look at some of the quant studies that you can scroll on Twitter, and there's a lot of good guys who are good at that stuff. There's a lot of studies that just keep putting strength further and further out. Like last year, coming off the bear market low in 2022, there was reason to believe that we'd have a 1 or 2 year bull market. We're like 14 months in January 2023. You got a handful of people who do these breadth thrust indicators, and that puts us out right now. Last summer, we had studies that point us out to another 12 months. And even right now, we have stuff that points us out to the end of next year. So whether you're looking at the indexes, not only in the US, but also internationally, when you're looking at breadth and how participation is very good across the board, when you're looking at some of these quant studies, it's kind of hard to not be bullish. Overall, like anything goes day to day, anything goes week to week. We could certainly have a month or two of sideways choppy movement coming off of October, November, which was just, one of the best 2-month rallies we've had in history.
5,000 points for the Dow in 2 months. 5,000.
Yeah. It's kind of hard to not be bullish at this point. If you're wrong, if the market tops here and goes down, fine, you get stopped out. But from what I've seen over the years, the biggest loss that people take is not the fact that they buy at 20 and sell at 19. It's the fact that they buy at 20 and they sell at 22 because they're not sure. And then it goes up to 30, 40, 50. So to me, the market's doing well overall. I expect it to continue doing well. I have no idea what's going to happen in the next few weeks or next month, but overall, it's kind of hard not to be bullish and optimistic.
Jason, can you explain to me what exactly that means in practice, right? So everything you're saying, I'm looking at the same charts. So I'm with you on all of that, obviously. By the way, I love the fact that you brought up the global Dow. First time a guest, maybe even the last time a guest ever brings up the global Dow.
Definitely the first time, for sure.
Spencer's like, I didn't even know the global Dow existed until I was hanging out with JC, right?
So it forms the backdrop. And, if you're going to take positions, in order to press the button and enter position, you got to have some level of confidence. Okay. We're not robots. We can't just say this cross this, I'm going to get in, put a stop in place. You got to have some level of confidence, especially to size up when things are going really well, to really nail some big, some big moves. So you got to have confidence that the market's going to go up. So all this stuff forms the backdrop. Okay? It doesn't promise us that the market's going to go up next month or 2 months, but it gives you a little bit of confidence that, hey, if we have a pullback here, let's not get lured into the short side. Instead, let's start building our list of longs because there's a good chance we're going to get a really tradable bounce off of that. Whereas if you believe we have a top and you believe we're trending down, then you're looking short. And if indeed the bull market continues, then you're going to probably miss at least the first big chunk of it because you're looking short. So to me, just having the backdrop of all these international companies plus the US hitting highs, breadth being strong, all these quant studies pointing us to higher prices. It gives me confidence that right now, if we pull back, I love a pullback. A
pullback in what though?
The whole market. If the whole market wants to pull back, I'd be perfectly happy to sit.
We're getting so much rotation when something's pulling back, something else is taking over. Like for example, technology taking a little bit of a break, right? Some correction in the Qs. Meanwhile, healthcare and financials are making new 52-week highs, right? So pullback is like, it's not that simple, Jason, right?
Yeah, but like I find the best money to be made is when you have really good participation, when there's easy trading and there's more challenging trading. So when more things are on board, it's easier to size up, take some good positions, nail some good moves. So you're right. Tech is definitely pulling back here, and some other groups are inching up or continuing to inch up. But I'm not like 100% like, hey, we need to trade this as if it's a runaway bull market. To me, it's like we just had an amazing 2-month run, and more likely than not, we're going to take a rest here. And what that means, as far as trading goes, is that in November, December, we were playing breakouts and nailing 50% moves in a couple weeks. Now we got to be content with 5%, 10% instead of, expecting or looking forward to those bigger moves.
I like how you are aware of the market environment first and then allowing that to dictate how you're going to move forward. What you just said about being a little quicker on certain trades and certain targets because of the environments is really interesting. What about from a sector standpoint? Anything stand out that you are avoiding? Or a particular area of emphasis
so
that you're looking at?
We have a soft spot right now. Got a cold here.
We appreciate powering through.
Yeah. Thank you.
Again, most money is going to be made when the trading environment is really good. You're correct. The single most important element of trading is market conditions. Okay, we've seen the market where it acts stupid. You can close your eyes, buy any like 5 stocks and make money.
Wait a minute, Jason. Wait a minute. So all that money I made last year, it wasn't because I'm so smart?
Actually, no. I'll tell you what it is. The money you made last year was not because you're such a good trader. It's because you're really good at recognizing market conditions, and then you know how to press on the accelerator or ease up a little bit. It's more a function of, are you in line with market conditions, not are you really good with the details of trading. Most gains are most gains are. Go ahead.
They said who was somebody was Charlie Mark. Somebody said don't confuse smarts for a bull market or something like that. Who was it who said that?
I don't know who said that, but yeah, somebody said
Good
that.
for him who said that. And why do we assume it was a male? That's very sexist of us. Could have been a female. Doubt it. Could have been a female. Probably a male. All right. So get back to the sectors. What stands out?
Yeah. So by far the most important aspect of trading just being the market conditions. Okay. Is that sometimes the market just acts stupid. The animal spirits are out. You can buy anything and make money. Sometimes it's very challenging. We just went through a period. I mean, all of 2023 was, we had 7 good months. Then we had 3 downtrending months. Then we ended the year with 2 great months. Now the question is like, what is the nature of the market? What's its personality? What's its character right now? What's its offering? So whereas in November, December, it was offering, Bitcoin stocks were breaking out, running 50%. Some of them doubled or tripled. Right now, I don't see that. So maybe financials are doing well, but maybe you make 5 or 10% with those. You're not going to make 50% with those. So market conditions right now, to me, are so, not great. So that guides me. Okay. I'm not going to be really aggressive here. You had me on in September. Market was moving down. Now you have me on in January. Market's a little skittish. Maybe you can have me on when the market's going up and I could post some good ideas.
Well, when we had you in September, the market bottomed a few days later, right? New 52-week lows list peaked October the 3rd. So it's right on time.
But the market didn't really bottom until the end of October. And then the big run.
Indexes, but most stocks were rallying throughout October.
There were some stocks that did well, yes.
The dollar. So I'm glad you brought up the dollar chart, because the dollar was getting clobbered throughout October, right? The dollar peaked on October the 3rd. Emerging market currencies were ripping, which was a great leading indicator for the strength that was to come in November and December for sure. Why did you bring up the dollar, out of curiosity?
Okay, yeah, I set the dollar and the S&P chart. This is not a prediction. This is just something just pondering, thinking about, like, what if this actually happens? Actually, can you put up the S&P chart first? All right, so is the S&P chart going back 10 years? One thing I've been wondering, just to myself, what if what has taken place over the last 3 years is nothing more than a 3-year consolidation pattern? Market moved up, moved down, moved up. 3-year consolidation pattern within a bull market that started in 2009. What if that's the case? If the index breaks out, a measured move takes it to 6,000. So now put up the dollar chart. And the question is, like, what would fuel a move for the S&P from like 4,800 up to 6,000? If the dollar breaks down here, and this is again a 10-year monthly chart, if the dollar breaks 100, doesn't just like undercut and recover, but actually breaks 100 and starts trending down, that could be the fuel that gets the S&P going. It's not a prediction. I don't know if it's going to happen, but it's something that's in the back of my mind. I'm like wondering, like, what could fuel the market? And I think this chart might be one of the more important ones that fuel
Jason,
it.
I'll raise my hand here. I'll make that prediction. I do think that's what's going to happen. How about that? I'm not scared. I'm not scared. That's what I think happens. I think we break. I don't know if it happens tomorrow, maybe next quarter, maybe even next year. I have no idea when it happens, but I do think that the higher probability outcome is exactly that. And I do think that would be the fuel to send stocks substantially higher. If you go look at the past, look at that peak in 2016 in the dollar. Dollar got slammed. How'd stocks do in that environment? Look at that peak in 2020. Dollar peaked. Then the dollar got slammed. How did stocks do in that environment? Then look at that peak up near 114. That was in the fall of 22. Dollar peaked and gets slammed. How did stocks do in that environment? Stocks love a weaker dollar. Stocks do not love a stronger dollar. So if I'm right here and the dollar breaks down and your suspicion is right and the dollar breaks down, Dow 50,000, S&P at 6,000. Totally with you, man. Totally with you.
Yeah, and it's not even that far fetched. I mean, if the S&P is at 4,800, it's only 22%.
I was thinking the same thing in my head. I'm like, that's not even that far.
It's not that far at all. We just rallied from like 3,600 to 48. Why can't we do a measured move up to 6?
That's right. That's right.
Jason, I asked JC this question a little while back. I'll ask you. In this scenario, is it more important for the dollar to break 100 or simply just not go higher?
I would say it's got to break down.
Okay.
I would say break support. A lot of technicians will jump on that. I'd say break down, trend lower, and the animal spirits will come alive. And it could be a really quick move. It could be like a 6-month move, 3-month move. It doesn't have to be a multi-year bull market that goes from the current level up to 6,000. It could be a fast and furious move up to 6,000.
Yeah, and I would encourage everyone to keep an eye on the emerging market currencies, right? So the dollar index doesn't include any EM currencies, doesn't include the Brazilian real or the Mexican peso or the zloty, doesn't include any of that stuff. Ton of euro, British pounds, Japanese yen. And while the dollar index has a ton of euro, that is true. It doesn't mean that the euro is the only currency that goes against the dollar. There's a lot of great information in the EM currencies, to what we were discussing before. Throughout October, the dollar was selling off. Emerging market currencies were ripping throughout all of October. And if you were paying attention to that, you would have been buying stocks. And November and December were great for the stock market. But the currency market, to Jason's point, was already giving you the heads up there.
Great point.
So I would broaden the dollar index is great. I'm with you totally. But for additional information, looking at the market breadth, if you will, here we are talking about market breadth of the stock market, which is great and important. What about market breadth of the currency market and looking at the rest of the world compared to the US dollar, not just a euro dominated index, I think is really helpful.
It's a great point. So
what
here we
would
are.
okay, what would have to happen for this bullish thesis? When you talk about, well, you get long, you can get stopped out, but I'd rather do that than miss out on a monster gain. What does the market environment look like overall, other than a rising dollar? What does the market environment look like overall in an environment where it's probably not that advantageous to be aggressively buying stocks? What else do you think is going on?
So I think, as I said at the top, everything's trending up. Breath's good. Quant studies point towards higher prices. We might not have a runaway market like we had the last 2 months, but I think the market generally does fairly well. If the dollar breaks down, that would be huge fuel to the fire. If the dollar doesn't break down, I would say the backdrop, we have a wind at our back and we should be leaning bullish. And while we lean bullish, there's going to be sometimes where we're pushing hard and sometimes where we're easing off. But to me, the wind is at our back and we should be focused on the long side.
Do you think the dollar and rates stay correlated the way they have been dancing lately?
Rates are probably the big, if you ask me, like, well, what could dethrone this? Like, if I'm bullish, I'm leaning bullish, I'm optimistic, like, what could dethrone this? I would say if the Fed changed their tune, which they can, the market's at, close to its high. And why would the Fed lower rates if the market's close to its high? Shouldn't they be lowering rates when the market is struggling? So they could change their tune. It's possible. And the other thing that I'm wondering that could kind of derail all this stuff is, what if we just have a gigantic sell the news? What if we actually get a lower, rate reduction in March, April, whenever it is, and that's just a huge trap, and we have a sell the news afterwards? Like, that's, so I'm bullish, but like, that's what I'm looking at as far as like what could derail this. I'm like wondering how Wall Street's going to react to lower rates. Like, it could be all the buying we're seeing right now could be in anticipation of lower rates. What if it's a big sell the news when it happens?
Well, rates have been coming off though, right?
Yeah.
I mean, when you look at the 10-year yield, which is the important thing in my opinion, because I'm not a bank. I don't give a damn about Fed fund futures, the Fed funds, right?
Right.
I'm interested in the 10s, right? And 10s have been coming off hard.
Absolutely.
So stocks and bonds stay positively correlated. We got to get used to this. This is here to stay.
I think so.
How long can they stay positively correlated? Years? Decade?
I don't know. I don't make those guesses.
No. I know. I don't know either. I'm just thinking like philosophically, just kind of like you and me are at a bar shooting the shit. Like, this could last a long time, you think? Potentially?
Weird. I've been around long enough to know that like weird things happen, unexpected things happen. And like, when you think you know something, like sometimes like everyone else knows it and like the opposite happens. So it's like, I don't spend that much time trying to figure out like, well, how long are these going to stay correlated? I'm just going to go with the charts and, bullish backdrop. Maybe there's a sell the news when the Fed lowers rates. That's just kind of the thoughts that that are lingering in my mind. And then I got this dollar chart thinking if it breaks down and trends lower, that could just release the animal and it could just run higher.
What are you looking for to confirm that stocks and bonds are no longer moving together?
I don't
Like,
actually look at bonds that closely.
You don't got it. Okay.
I mean,
You're looking at rates, right?
I know the 10 years come way off, and the market likes that. And I do look at that daily and every couple of days just to keep an eye on it. But as far as keying in on an actual correlation, I'd rather just look at individual charts. They'll guide me.
Where are you located, Jason?
Denver.
Ooh, nice.
Great place. Where are you from?
Great
Chicago.
city.
Dude, how do you like Denver? Denver's awesome, huh?
I like it, man.
I was just talking to this kid who just moved to New York City from Denver. Josh and Batnick, their intern. I don't think he's an intern, actually. He's like one of the low-level guys. And he just moved to Queens from Denver. I was like, oh, Queens is just like Denver, right?
Wait, last thing, Jason, define a breakdown in the dollar, because you said, not just it's not
Is it 100? Is it that clean?
No. It's not about that, because it could be a false breakdown. So define what that breakdown is.
It's just got to go below 100, stay there, trend lower. Okay. I mean, if it goes below 100, I'm watching it, but I also know that it could be a false breakdown and it could recover. Yeah. So okay. Break it down and don't recover and continue lower. And you can see this from this chart. It's kind of trendy. Like once it gets moving, it could move several months in the same direction.
To Spencer's point, though, earlier, not to give Spencer too much credit, but to his point earlier when he asked if the dollar necessarily has to break down or if not going up is good enough, 2023 was a hell of a year for equities, and the dollar, didn't really do much. Right?
You're absolutely right.
But to your point, Jason, for that S&P 6,000, Dow 50,000, for that to happen, you need the break. I'm with you on that.
Eventually. Well, I mean, we'll get to 6,000 eventually. Who knows what year? But if it's going to happen with the animal spirits coming alive in the next year or two, it's probably going to coincide with the dollar breaking out.
Listen, I listen to you. I hear S&P 6,000 by year end. That's what I hear. No, am I just hearing things?
I think you said that.
Am I putting words in your mouth, Jason?
I said I'm kind of thinking about like if this is possible, and I'm wondering if I'm nuts. And then you said I'm actually going to say it's going to happen.
You're open minded to it happening this year? I take
absolutely. I'm open minded.
All right. Need a dollar sell off though.
Yep.
All right.
Jason Leavitt, founder, head of research at LeavittBrothers. His handle is up on the screen. The link to his site is in the description. Jason, always a pleasure. Happy New Year. I think we're still within the reasonable time to say that. And thanks for coming.
Thank you very much. We'll see you guys.
All right. We'll have to get Jason
back.
I
love Denver. What a great town that is.
Denver is awesome. Yeah, I've only been once or twice. I don't know, but it's great. I do love Denver.
Denver's a great time. You go a couple hours west, some of the best skiing on the planet.
So I've heard. I haven't experienced it.
Dude, you've never been out there? How often are you skiing these days, Spencer?
Man. Well, dude, Michigan made it freaking impossible to ski. So, but normally I'm really like a once or twice a year kind of guy. I'm a filthy casual.
Go out west. Go out to Vail.
Yeah, I know.
The back bulls in Vail are crazy, dude. Crazy.
It's on the list. All right, let's cover a couple more headlines, and then we'll have Ian Cully hop on in a few. Okay, so we talked about Boeing already. Let's talk about. We had some guidance this morning. A couple of guidance headlines from a few retailers. We had Crocs and Lululemon both come out with guidance. Crocs it had some pretty heavy volume at like 6 a.m. Yeah, it's up 12% now. They expect revenue growth of 3 to 5% for the year compared to prior guidance, which was a revenue decline. So they're increasing their revenue guidance for this year. CROX, like I said, up 12.5% this morning. And this is kind of funny. Lululemon actually they gave guidance too. Their guidance was also a raise. Stock actually dropped on this headline. It's since recovered, I believe.
Spencer, do you wear Crocs with your yoga pants?
I have a pair of Crocs slippers. I think I've discussed this before.
Yeah, but do you wear them with your yoga pants?
No. But I have a pair of Crocs slippers that I've probably had for 13 years, and I only wear them in the winter. They're ridiculously warm, and they'll probably last for the rest of my life.
When you go to your Pilates class, Spencer, with all the other yoga moms, take your Crocs because you're gonna take your shoes off, right? You could wear your Crocs with your tight pants.
Okay. Well, I thought the move was Athleta, not Lulu. I don't own any Lulu to my
Dude,
knowledge.
get some Lulu,
Um,
man. Lulu's
I know.
great. I got Lulu.
I know. So anyway, Crocs and Lulu.
Lulu's
those
socks. Lulu's socks are pretty fantastic.
I do need new socks. Half my socks have holes in them. I'm that guy.
That's disgusting, Spencer.
Oh, look at that moving Crocs.
How does your
morning.
wife
Crocs
put up with you? You got holy socks?
It is definitely her. If you asked her to rank the pet peeves of me, then it's definitely near the top of the list for
Holy
sure.
socks. Just throw them away.
I have attachment issues. What can I say?
Throw them away.
Anyway, that Lulu chart looks fantastic, and that Crocs chart is wild. Is that are these new highs?
Not for Crocs, but Lulu's pushing up against new highs. Yes.
Yeah. Wow. Pretty remarkable stuff. All right. And the other headline I had, this just came out, I don't know, like within the last hour or so. Apple announced the Apple Vision Pro is going on sale in the US.
What is an
February
Apple
2nd.
Vision Pro?
This is their VR headset.
Got it.
This is their answer to Facebook's what's it called, the Quest, right?
Should I buy one?
Something like that. It'll be $3,500, available for pre-order beginning on the 19th. Available for.
And when does it get delivered? It's pre-order.
I don't know, but it'll launch on the 2nd, so I assume not too long after that.
I usually do this stuff. It's my research. You know, you got to play with the toys. This is like a new toy to play with.
Yeah, man. I mean,
$3,500 for a little, you know, seems a bit much.
I don't know. I'm not an early adopter of anything, pretty much. So I'll wait and see.
3,500, huh? How much is the Facebook one?
Great question. Anyone in the chat know how much Facebook's Quest is?
Probably like a G Note. Probably like a G.
Oh, what? Way cheaper. Holy crap. Is that right? There must be different models of this thing. Because it's been around for a few years, so it's definitely
sounds to me like the Apple one's going to be sick.
$500. I'm seeing it at the high end for Facebook.
Yeah, it's not that great. So maybe the Apple one's going to be like just ridiculous, right? $3,500.
That's a pretty penny. Yeah. Wow. Anyway, so yeah, I saw it last night that there was going to be some news on that this week. I didn't realize they were going to announce they were going to actually start selling it. So anyway, Apple, we have the chart. There it is, pushing up against. Looks like Apple, right? Apple is as Apple does. Okay, that's pretty much it for the headlines for now. Let's talk about a hot corner. I think we had a couple things on the hot corner. I think. Let's check.
Hot corner. So hot right now.
I don't think we discussed the hot corner too much last week. There was a lot, and I mean a lot, of options activity on the hot corner.
Yep.
I think like Wednesday and Thursday.
Yep, I did notice that.
Yeah. Not so much today, but or I should say Friday, but just an unusual amount of options, unusual option activity, which is interesting. So this morning, Star Surgical, Casey's, General Stores, which I always forget is public, and Intern Co. I don't know what that is, but these are all actually that Star Surgical is.
Yeah, throw up the slide 2 there. Yeah, big purchase there. We've been seeing a lot of insider transactions coming from there. $6.5 million purchase of STAA. So there's a $1.3 billion medical equipment stock. I mean, you know, we start getting under 20, you know, might be worth a look, but I mean,
remind me the medical devices ETF. What is that?
IHI.
Thank you. Oh, I have it on my list here. I should have known that. That always interested me. Like that space I find interesting. Surprised it's not doing better than. Surprised it hasn't done better in the last couple of years. I don't know.
Because healthcare has been a massive underperformer over the last couple of years. It's really traded sideways. You know, and what's interesting is when you talk about a lot of this medical equipment, medical devices, they're essentially tech stocks. And for many years, they traded with tech stocks, not really healthcare. but recently they've been trading with healthcare and really underperforming. Not all of them. Look at Intuitive Surgical.
Yeah, I mean, what a decade for IHI. Oh my
Because
gosh.
think about it, these are robots that are
You're right,
performing
you're right.
surgery. But
It
they're not
looks
trading
just
like
like the
tech
Q-
stocks these days, which is interesting. They've been trading with healthcare.
looks just like the Qs from 2010 to 2021, basically.
The problem is Medtronic just has not been working until recently, of course, over the last couple of months. That's a big component there. Abbott, right? Let's see. Abbott Labs, largest component. Intuitive Surgical pushing up against new highs. Medtronic's been struggling. But some of these other names, look at Boston Scientific, BSX, potentially breaking out of this monster multi-decade base. So there are opportunities within the space. The ETF itself has been held back, as has most of healthcare for that matter. So if healthcare comes back, which I do think, just made new 52-week highs, and healthcare becomes a leader this year, and I think it does. I think some of these medical equipment stocks can do well, particularly the ones that are already doing well while the group is not. Like Star Surgical is not on that list, but something like ISRG or BSX.
Yeah, I was gonna say Intuitive. Yeah, how is Intuitive looking? Oh man,
Intuitive looks good.
Yeah, not bad.
It still has some work to do, but it's getting there.
A lot of familiar names on this. And then I'm told that the other two charts on Hot Corner look a lot better than this. Do we have the Casey's
Stryker's
chart?
another one that looking pretty good. The other names, Casey is a grocery store. It's not very good. And then you got a 13G and another regional bank. INTR. So this is INTR. So this is Inter and Co. Yeah, man, look at this thing. So here we're looking at INTR. It's a $2 billion regional bank from Brazil. Oh, yeah. This is the Brazilian regional bank. Yeah, of course. Yeah. Look at this thing. So, look at that 580 level. We break out to new highs. This is a nice consolidation. Interesting. See that?
Where are the Casey's general stores? Sorry, I was trying to.
Doesn't matter. They're not going. There's going to be no more of those soon.
Really?
Zero. Look at this thing. Have you seen the chart?
I've seen them. Oh, it's because they're all in the Midwest. That's why I've seen them. Okay, that makes sense. Yeah, they're all in. They don't go east of Ohio and they don't go west of Nebraska.
All right. Well, maybe that's why they suck.
Hey, anyone in the chat from the Great Plains states, let us know.
For the record, I have no problem with the Great Plains states. I actually love those states and the people from there. More importantly, they're much nicer than the people from Queens. I'm just not interested in buying shitty stocks that keep going down. It's mostly that. I'm just racist towards bad stocks.
So yeah, Casey's is a competitor, I would imagine, with like Dollar General and that sort of thing.
Casey's is this thing's freaking awesome, man. This is like Casey's is like with Costco, Walmart, TJ Maxx. Like these are the big winners. These are
That's a great looking. Wow, I had no idea that the chart looked like that. Anyway,
staple, or do you know if it's staple? No, it's actually considered consumer discretionary. What's interesting about Casey's, as well as it's been doing, is considered a consumer discretionary, but Costco's is a staple.
How are they discretionary? It's a convenience store, isn't it? Am I wrong? I thought it was.
I think Costco should be a consumer discretionary, and it's a staple. Oh, so I don't, I have my issues with staples and right, you know what I mean?
All right. Anyway, guys, the Hot Corner goes out every single day. It's a list of all the biggest open market transactions from insiders, executives, congressmen, hedge funds. We send it out every day in the morning. It's free. If you want to sign up, get on the list. I'm going to drop the link in the chat right now. There it is.
It says Casey's are gas stations. So they're convenience stores and gas stations in Iowa. That's cool. They're doing something right.
Oh. Okay. Today we all learned. Let's move on let's look at the chart report, and then we're gonna have Ian Cully hop on in a couple of minutes. So let's do that. Let's do the chart report.
We're saying Costco's a staple because they sell groceries. First of all, Costco sells everything. They're selling gold bars now too. Do people need those?
Oh my gosh, this weekend I was one of those people.
Stop! You bought a gold bar at Costco?
No. Sorry, that's not what I meant. I was one of those people that was actually waiting online for Costco to open their doors.
Why?
I was there. They open at 9:30. I was there 9:15.
Don't you have Instacart?
I don't like that stuff.
Like technology?
Also, I don't have kids, so I have the time to go out
True.
and go shopping.
Fair.
But I don't know if I trust a stranger to buy my food.
Yeah.
I don't know.
You know, with the produce and stuff like that, it's not as great. Like if you're looking for more ripe avocados, they're going to bring you the least ripe ones. If you want least ripe avocados, they'll bring you the most ripe ones.
Every avocado at Costco is hard as a rock. Let's do hot corner chart report real fast, and then we'll bring on Ian.
All right, what do we
Turn
got?
of the day was from Jeremy Schwartz. He hasn't been on the show yet, has he?
No, get him on. Get him
No, I
on.
don't think
He's
so.
great. He's a friend of ours.
Yeah.
I go on his podcast all the time. The least he could do is return the favor.
All right. Yeah. Anyway, kind of hard to see there on the screen, but we're talking about drawdowns in the major indexes here. So,
And this goes back how long?
9 years, 8 years, 8 years. Call it 8 years. December of 15.
And these are just drawdowns from the S&P, Russell 2000, EFA, and emerging markets.
Yep. So it's looking at drawdowns, and then it's looking at the days.
So the S&P 500 is not at a drawdown, basically, is what it's suggesting.
No, not even close.
Right.
No, 1 week that doth not make a drawdown. Okay. Quote of the day, Andy Warhol. That's interesting.
I never read. I just look at pictures. Andy Warhol. Shout out Andy Warhol, closet technician.
Oh, speaking of the picture thing, you see my tweet over the weekend? I was at a bookstore, and there's this book called "How to Lie with Charts."
Oh yeah, I saw that. And how was it? Was it a good book? Sounds riveting.
I didn't buy it. I don't know. I didn't buy it.
You didn't even buy it? You're tweeting out books that you don't even own?
Yeah, man, I got too many books. I just bought another book over the weekend. Actually, I got it delivered yesterday. I have too many books to read. I can't be buying more. I have to read the ones I got first. Okay, weekly S&P chart, winning streak. Rest in peace to the winning streak in the S&P. Not a surprise there.
9 straight weeks S&P was up until last week.
Yeah, pretty good.
Not bad.
Oh, some equally weighted XBI. Well, XBI is equally weighted, so looking nice. Latin America, we discussed this morning.
Shout out funds.
Money market funds. We don't need to go through this again.
Money market funds. So what are these people so scared about? What do you think people are so scared about, Spencer? Why are these sell-side analysts so pessimistic, and why are cash levels so high?
How much of this money is just like helicopter money? You know what I mean? That just dropped down from the sky from Uncle Powell.
No, I would say none of it. What do you think people are so sad about, Spencer? Stock markets are all-time highs all over the world. World's never been a better place. And people just want to load up on cash, and these sell-side analysts are very sad. What are they so sad about?
By many measures, the world has never been a better place. However, that does not mean the world is a great place for everyone. The world is a not great place for a lot of people.
Well, what about for investors, which are the only ones that matter in this conversation?
Then yes, the world certainly.
So I'll ask again, what are people so sad about?
It could just be a demographics thing. I don't know. I like, the boomers are all getting old, man.
All right, but what about sell-side strategists? They're not all boomers. What about all the institutions that are at historic levels of cash? These are not boomers.
Yeah. I don't. What the heck is this chart? What?
That's the old diamond pattern. The diamond pattern that never seems to work.
I don't know if
I read about it once. I took a test on technical analysis like a zillion years ago, and it was on the exam once.
I've never
that's the
even.
extent
I don't know
of
if I've heard of this pattern before. It's a new one for me. Okay. Anyway, chart report, guys, also is free. It goes out every single day. I'll drop the link in the chat, but the link should also be in the description on YouTube. It is. It's right there where it says
chart report. Maybe my favorite email I get every day.
Yeah, Patrick does a great job. Patrick, who joins the show most weeks on Tuesday. I just dropped a link in the chat, but it's in the description. Check it out. Again,
I'm looking at the chat. People were like, "Well, the average American, what does he say? The average American Joes and Janes are struggling." Again, what does that have to do with the stock market? Those people don't matter.
well,
Hold on. There's more. People are sad about high housing costs.
Yes.
Again, the people that are investing, they own their houses. There's nothing to be sad about. They should probably be thrilled about that. So the people who actually matter. The people who don't matter are the people that are.
Everybody matters, man.
No, they don't.
Peace and love.
People who don't own their houses, why do they matter to the stock market? People who,
why
the average Joe and Jane, whoever that person is.
Why does any one individual matter to the stock market? Nobody matters to the stock market by themselves.
What are you talking about? Those with the wealth are the ones that are driving prices higher and lower. Yes, those are the ones that matter.
In terms of groups of people, sure.
Yeah.
Maybe part of the reason that there is this dichotomy between the haves and the have-nots is because of access to the markets, right? And those that have are the ones that have assets that are invested in.
But that's capitalism. You need your haves and have-nots. It's perfectly normal.
Sure.
Remember what happened when we gave everybody money? How did that work out? That was terrible.
Well, it was fun.
Right?
It was fun for a little while.
No, it wasn't. It was a disaster. Nobody wanted to work. It was a disaster. Communism doesn't work. We have the data.
Wait, this was in the second half of 2020. Market was great.
Right. But what were the implications after that?
We're still kind of working our way through that.
Right. So communism doesn't work. So you need your haves and you need your have-nots. That's perfectly normal. There's nothing wrong with that. The have-nots need incentives the have-nots need incentive to no longer be a have-not.
I don't disagree with
without that incentive, right?
Capitalism infinitely better than communism. Like you'll get no arguments from me about that, right? Communism, we know that doesn't work. We also,
So I'll ask again.
Yes.
What is it that people are so sad about? That these institutions have historic cash levels. Sell-side strategists are incredibly pessimistic again after whiffing this year. I don't know.
My only guess is I don't have a guess, but I do want to see once rates come down, once interest rates come down on these money market funds, and when we go from 5% to 4.5% to 3 to 3.5, right? Or 3.5 to 3. Then let's see how sticky this money is. But for now, I don't know. Kind of have to wait and see. I feel like, hey, for a lot of people, like me, I've never earned interest on anything in my life. Right? This is like a first for me. So, not saying I should go all the way to cash.
I was going to say, by the way, that 5% interest risk-free that you're earning, number one, is not risk-free because the opportunity cost that comes with it. These idiots that put their money in 5%, they missed a 60% move in the Qs.
Maybe.
And have been bragging about their 5% all along. Hold on.
Okay.
After you pay taxes and adjust for inflation, that 5% is actually in the negative. So you're actually paying money out.
Maybe all this money is just people waiting, saving up for a down payment to buy a house. I don't know. Just a thought. I don't know. Okay, let's move on.
$4 trillion in institutional cash, I can guarantee you, are not people saving up for money to buy a house.
Institutions are made up of individuals
that are managing other people's money, that it is illegal for them to put in cash to invest in a house.
Okay. I don't know. Should we bring Ian Cully on? Ian, what's up, man? All right.
Please.
We have Ian here.
Let's talk about cash futures. Is there a cash futures?
Dude, why is there no 2 times levered money market mutual fund ETF? Right?
Now we're talking, Spencer. Now we're talking.
There should be.
Get that 5% up to 10.
That feels like a wisdom tree type of product, doesn't it? All right. Let's
but there would be a margin requirement. That would be the arbitrage there. So that would get arbed out quick.
Sure. All right, Ian, you ready? Coming on.
Ian gentlemen in the house.
It's happening.
Ron's talking about no risk when you're retired is very important. Maybe, but retired people don't matter here. It's $4 trillion in institutional cash. So these are not retired people. The retired people don't matter in this conversation. These are institutions. These are professionals.
Can we come back to this in 6 or 8 months when that when that rate has probably come off a little bit, and then we can see.
What do you think, Ian? When does that start to unwind? And how much of a tailwind does that produce for equities?
I think it starts to unwind when bonds are no longer in a structural downtrend. I think it starts to unwind when there isn't still risk of future rate hikes. I think the market's starting to respond to the fact that Powell still has a lot of work to do.
Wait, future rate hikes?
Yes, future rate hikes. Yeah, I think.
Huh?
I think the market's gotten carried away with 6 cuts this year.
Well, that changed dramatically over the last couple of weeks.
It's changed dramatically over the last couple of weeks.
Can you explain to the non-Fed Fund futures watchers what has transpired over the last couple of weeks? What was it pricing in before? What's it pricing in now?
So the big change, and before I tend to only look a few meetings out. Right? I'm not really too concerned with anything past June.
What is this? March, June?
Yeah. So they were looking at there was a really high probability of a cut in March, and that probability has shrunk dramatically over the past couple of weeks. So I think that's what the market is responding to. That's why we haven't seen gold break out. That's why energy continues to dig in. That's why bonds, yes, they ran into a logical level of resistance. We saw some selling pressure.
Why are you making these noises, Spencer? These grunts?
Yeah.
What's your beef with what Ian has to say? What's your problem?
It's just the charts.
No, he's right. I mean, the rate is the probability is still high. It's still 60% for a cut in March, but it's not like 85% like it was.
There's no meeting. There's no meeting before March.
No, sorry. There's a meeting in 2 weeks, but
and what happened? What's going to happen at this meeting according to Fed funds?
95% chance, nothing.
But March, 60% chance that they're going to cut.
4% chance, something though. So, yeah.
I just, I think the market got carried away. I think there were high expectations of a bunch of cuts this year, and sure. They might cut. They probably will, based on at least what the market thinks. But who knows? I have no idea if they're going to cut or not.
Yeah, but one thing that we do know about history is that if they're going to cut, let's just say, we know they're not going to be raising anytime soon, right? Like their actions trend also. Mm-hmm. They're not like, oh, cut, raise, right?
Right. But then we have situation like we're dealing with right now with shipping. I mean, there's a lot of shippers that don't want to use the Suez Canal anymore because of the destabilization over in the Middle East, and now they're gonna go all the way around Africa. I mean, those aren't calm waters down there around Africa. I mean, you lose a lot of ships down there. It's just risks are increasing.
Losing surfers. They're just losing pirates.
Yeah, I mean,
now we're talking about shipping risks. Oh boy.
Yeah, well, I mean,
Suez Canal is a big deal. I know nothing about economics or fundamentals, and even I know the Suez Canal is a big deal.
Don't you have a chart about this or something?
I dropped in the Baltic Dry Index.
That's what I mean. Yeah.
In the chat, in our internal chat.
I thought I saw that somewhere this morning. There we go. Wow.
Look at that.
I don't know. I got Sam looking at some shipping stocks here for us this morning. So
what's really interesting about these shipping stocks is you're never going to find them in the large cap indexes because they don't get that big. These are not scalable SaaS companies. These are small and mid cap stocks, and they forever will be.
Yeah, I mean, I love that the Baltic Dry, the BDR shipping ETF, but it's not tradable.
Yeah.
It's not tradable.
Yeah, but you can look at the components.
That's what we're doing this morning.
Yeah. You can look at the components of the shippers, and these are marine shippers, and they they're gonna always be small. They can only scale so much. Like you're not gonna find $100 billion marine shipper. No. You're gonna find a $3 billion marine shipper from Singapore.
Is Maersk the largest? Do we know?
I think so.
Yeah, that's AMKBY.
Matson's got to be up there.
Yeah, Matson.
Too,
rest in peace to dry ships. Anyway, That was a fun stock for a while. All right,
My
so
my
Ian,
wife's in the industry, so I hear things. You
Ian,
know,
All right.
Ian, what else should we be talking? I was just mentioning earlier how we recorded a video about coal on Friday. It's going to go live today.
Okay.
So maybe don't spoil that just yet. But what else should we be watching?
Well, I brought one cool chart with me today. The Arch ARCH.
yeah. Throw up the Arch, Ian. You know,
That's
when you
such a
see
good
Arch
looking
doing,
chart.
when you
I'm
see
sorry.
Arch doing what it's doing, you see Warrior Met doing what it's doing. You look at Alpha Metallurgical doing what it's doing. These things look like the XLE. Zoom out. They look exactly like the XLE, except the XLE isn't breaking out to new highs like some of these others.
Right.
You think it's irresponsible to like pick out these $2, $3, $4 billion coal stocks and derive information for something as massive as an integrated energy, oil and gas index fund?
Well, I don't know if it's irresponsible, but you just trade what's in front of you, right? I want to be long the strongest names here, and this is, I mean, it's coal right now. If you take a look, I brought a couple other charts. You know, metals and mining have really, they've been the star of the past, couple months. They've really been outperforming. But our equal weight energy index is digging in at a logical level where it's found support over the past decade and starting to bounce higher relative to those leaders, relative to metals. We're seeing the dollar catch higher. We're seeing bonds roll over. It's a perfect storm for metal and mining stocks and just the entire metal space, precious and base, to take a breather and for energy to start to outperform. And that's what we're seeing. Last year, it was coal. I mean, coal outperformed every area of the energy space, even uranium, where you had the Exxon, you had your big oil and gas, your Schlumbergers, the old school dirty energy kind of falling behind. I think we could see a catch-up trade there. But that's not where I would want to put my money. I'd want to put my money in the leaders, put my money in what's working. And right now that's coal.
Boeing knocking down the Dow today. Boeing down 9%. But it really stands out on a day like today because you're seeing, and Chevron's down too for that matter, but you're seeing the NASDAQ up 80 basis points, 127 points on the NASDAQ with bonds up, by the way. I want to talk about this correlation in a second. But just quickly, Dow futures down 200 points here, 20 minutes after the open. S&P futures up 10 points, about 20 basis points. Like I said, NASDAQ up 75 bips, 120 points. Bond futures up 23 basis points. Gold down, silver down, oil down almost 5% today, all with the weaker dollar as the volatility index inches up towards 14, and the U.S. 10-year yield looking to try to break back below 4%. Can we talk about the correlation there between what we're seeing in stocks and bonds? Is that here to stay?
I think so. I think it's here to stay. It might. I mean, I imagine if it's here to stay until there's some evidence that it's not. Let's put it that way. I think it can be that simple.
Let's be open-minded. I just try to ask Jason this question too, and he didn't answer it as just like you didn't answer it. Philosophically speaking, should we be open-minded to this particular relationship staying positively correlated stocks and bonds for potentially years? Like, is this just a month's thing? Like,
I think we could. I think we'd be open-minded for it to staying positive for an extended period of time.
Would it be irresponsible to not be open-minded to that?
Yes, it would be irresponsible. It's just irresponsible not to be open-minded. Period. Just give everything a try. Give everything a benefit of the doubt. Do your own due diligence and decide. So yeah, absolutely. I think this relationship could stay positive for an extended period of time. Absolutely. I mean, if you think,
is that the bet?
Is that the bet? I don't know if that's the bet. I don't know if I want to make a bet on an intermarket relationship like that.
No, that's fair, and you don't have to.
You're right, and that's the beauty of it.
But the bond market not acting as a safe haven as it has for the majority of our careers,
right,
is not important, right?
No, No, it's
Like,
very important.
We don't
Could this
necessarily
just
have
be-
to make the bet. The bet has been the defensive asset that's consistent pre-change in relationship between stocks and bonds, and post is the dollar.
Yeah. Yes.
So the bet that we make is the dollar remains the negative correlated asset.
Yep.
And
Absolutely.
let bonds do what they do.
Yep. And I mean, maybe this is just a characteristic of a new rising rate regime. I mean,
or an inflationary regime where historically stocks and bonds move together in those inflationary regimes versus the deflationary regime that we saw for so long where stocks and bonds trade negatively,
100%.
Yeah.
Interesting. It's going to be
Ever
a
a
very
dull day
interesting
around
year.
here.
It's going to be a very interesting year.
Is this like, is that what we say? Like, how it's, we're going to get a lot of information this week. Is it like one of those?
Hey,
we're going to get a lot of information this year.
Everyone,
we're getting a lot of information this week. We got bank earnings on Friday. JC, who's
these banks earn money? I thought it was a banking crisis.
Oh yeah, that was a year ago. A lot of information this
Fun
week.
fact:
this month.
What was the best performing sector in the S&P 500 in the back half of 2023?
What's the banks?
Yeah.
Financials.
Yeah. Mm-hmm.
I was promised a crisis. Instead, I got new leadership.
All right, let's do some recess and get out of here. Where's my bumper?
I don't know.
And we're back.
That was weird. What the hell was that?
So I got some bungee cords. So I got these racks that are hanging from the ceiling in my garage.
Mm-hmm.
Right? I got them on Amazon. And I definitely did not install them. I wouldn't trust myself to install them anyway. I had like a guy, and I got some bungee cords so I can actually hang things from the rafters.
Nice.
Like bicycles.
So I'm being great with my efficiency in my garage cleaning. Ian, are you
Yes.
do you gain an unusual amount of pleasure when your garage is clean? And do you get anxiety when it is just a disaster like me? Or is that a dad thing, or is that a me thing?
That's a dad thing. That's a dad thing. I actually cleaned out my garage Saturday.
This guy, come on now. And does it make you feel good?
It made me feel great. And as I was cleaning it out, I found an old shoe rack that we had. My wife saves all of the boxes, all of her shoe boxes, every box. So we had an old shoe rack that was actually packaged in the original box we probably had for a decade. Anyways, back door, I see shoes laying all over the floor yesterday afternoon. I go out in the garage. I find the shoe rack that was neatly placed right where, I put it in Saturday, and built the shoe rack. And that also gave me a lot of pleasure to see those shoes neatly situated at the back door versus just all over the place. Dad thing?
Answer?
I don't know.
Answer? What do you got, baby?
No, I also cleaned out my garage. I had some big boxes that were too big for the recycling to get rid of, so I had to go get rid of them myself. And I actually have room now for a car, which is exciting because it snowed. So I actually put my car into the garage before the snow. That was great. But my recess, I don't know if I had a good read. My recess was the book that I saw the other day. I don't know if I don't have anything good today. I wish I had something.
I'll just address this clown in the chat. Who allows these losers in this chat? So let's see. Loud voice, but it's more talk than ride trades, I think. Everyone can talk about charts in the past. I've never heard him say buy the banks. Haha, fool.
No,
Let me school you there, little boy. We have first of all the charts in the past. We only have information from the past. So if you could point me to where I could find charts from the future, I'd be more than happy to talk about those. I probably would keep them to myself, but that's another thing. And you've never heard me say buy the banks. That's because you're not listening. You're not listening, fool. We've been buying the banks very aggressively, successfully, I might add. And so have a lot of people on here. So you must be new here. We already don't like you. So please don't come back.
That's been a mantra for months now. We don't own enough banks. And we've actually been laughing about it internally.
Right. It's been a joke internally that we don't own enough banks for months. So thanks for coming. Please don't come back. You're no longer welcome here. We are all now dumber.
Okay. And on that note, we're gonna hop. Unfortunately, no flow show today, but we'll be back tomorrow with the morning show. Tomorrow's guest is Scott Brown from Brown Technical Insights. He'll be on at 9. And
who's on Wednesday?
For Ian Culley, who's on Wednesday? I had to swap the guests. That Wednesday is Larry Thompson.
Nice.
Ooh,
Cool.
nice.
All right, good week.
Yep.
Good week. I like
Larry
it. I like
Thompson Wednesday, Denise Scholl Thursday, Michael Batnick Friday.
Michael Batnick on Friday. How about Denise Shaw on Thursday?
That's what I said.
Got a week. We
Dude,
got
a
a week. All right. Shout out Denise.
Everyone.
I like Denise a lot.
Watching.
Save more room for Denise, Spencer. I
more.
want to get down and philosophical with her. I want to talk about the mind.
Oh boy, that should be fun. All right. Thanks for watching, everyone. Hit the like. Thanks to our guest today. Thanks to all you in the chat for hanging out, and go make some money. See you later.
Adios.
See you guys.
Run it. I can't take no loss. I don't even know what it costs.